In today's video, I want to take a look at that short cycle scenario again in gold. Um, Remember, I had pointed out in one of my last videos that the last three intermediate cycles in gold had run long, with the last one running really long, and very often a short cycle will follow uh, a long cycle. So gold is potentially due to deliver a short cycle that after those three long ones. So I'm going to show you a couple things here, and it looks to me like this short cycle scenario is trying to play out. So first off, as of yesterday, we've got a break of the cycle uptrend line. I kept warning people that had to happen. Every update here, we get calls that the bottom was in, that you had to rush in and buy, and I kept warning people that's just not how these daily cycles behave. 99% of the time, they have to break the cycle uptrend line before you even think about trying to find pick a bottom. This is always the case. The same thing happened back at this intermediate top. As we started down, every intraday uptick was viewed as the bottom. People bought way too early, and then they get sucked into the intermediate decline, and they end up selling down here. So we've got the trend line break, but that doesn't guarantee that this is the bottom immediately. These trend lines can break and still go a long ways. The 38% retracement is right here at about $1,300, and I think we're probably going to at least go to there. It would be very unusual for a daily cycle to not retrace at least that much. So I think we probably still got some more downside here before we get our daily cycle low. So again, I wouldn't jump to conclusions that the first down day is going to be the daily cycle bottom. It may not, and I kind of suspect we're going to get, at some point anyway, maybe right after the FOMC meeting, we get a little bounce that sucks in the longs to, again, try and pick a premature bottom just like they did on these two up days, and then the bounce rolls over and we get one more lower low. So the correction turns into like an ABC correction. Now let me show you something else here. This is a chart of the Japanese yen, and I noted on my last video that gold, for whatever reason, has been following the yen pretty closely this year. And you can see here that we have not had a failed daily cycle yet in the yen. So we got our bottom back here in the very beginning of the year, and this daily cycle low occurred above this daily cycle low. This cycle bottom held above this one. This one held just barely, but it held above this one. So we haven't really had a failed daily cycle yet. Well, it looks to me like we have now. These cycles have been averaging about 40 days. This bottom here occurred on day 37, so I'm going to assume that this is the daily cycle low. You can see here we got a break. This appears to be a half cycle low. We got a break of the trend line, and then a rally. And so I think this is probably a new daily cycle. And you can now see that this daily cycle has broken below this cycle low. So we now have a daily cycle, failed daily cycle in progress. The thing is it's only on day 12. And these have been running an average of about 40 days. So this is on day 12 with an average of 35 to 40 days, then it's probably going to be, somewhere here in late October before we find a bottom on the yen, and the yen could potentially drop below this daily cycle low before this intermediate cycle finds a bottom. And a failed daily cycle is usually an indication that an intermediate cycle decline is underway. And if that's the case, then the intermediate trend line should get broken. So that would imply that this correction, even though it's going to have a bounces in here, the intermediate correction probably isn't going to bottom until we break this intermediate trend line, and probably not going to bottom until we get, somewhere between day 35 and day 40. We're only on day 12 right now. So if gold is following the yen pretty closely, and that correlation continues to hold, then we would, then the short cycle scenario comes into play, and gold follows the yen as it moves down into its intermediate cycle low, and we get at a bottom maybe sometime in mid to late October. I'm going to say that this double top here, this was significant resistance. You can see, we tried once, twice, and then it took a bunch of attempts over here in order to finally break through that 1300 level. If this intermediate cycle comes back down and breaks back through this 1300 level, I'm going to say that that's probably not a great sign, and I'm probably going to be right. The short cycle scenario is in play, and basically it just means that the metal sector has fallen right back into that basing pattern, that the breakout has been invalidated. Kind of the same thing happened back here in the fall. I noted that it was taking a long time for the metals to break through this 1275 zone, and if it then lost it, that would be a bad sign, and that's when I suggested people would might want to think about stopping out right here when this broke back below it on election day. And you can see when it did break back through that, then we had this long decline down into that intermediate cycle bottom. So in my opinion, this is an important level. This took a long time to get above it. If we break below it during this intermediate decline, we could come right back down to test this, the lower part of this basing pattern. So, I'll say the same thing I've been saying for months and months. The place to be, I think, is in the stock market, as I think we're starting a bubble phase. We've broken through 12 or 2500 on the first try. If we hold that, then we could be off and running in the vertical phase. There's no guarantee that we will hold that. I'll put the S&P up here, but you can see we've closed above 2500, which is kind of unusual. Most of the time, these big round numbers will trigger a pullback. Price just won't get through there on the first try. So there's a possibility that after the FOMC meeting we get a pullback, but it's going to be a pullback into a half cycle low, and it's going to be your last buying opportunity. I don't think that we're going to get a fourth daily cycle here. I think this was the intermediate bottom, and I think we're starting the vertical phase. The only question is whether or not we get a short 3 or 4 day pullback into a half cycle low after the FOMC meeting, or whether this breakout just holds and we continue to run and the vertical phase starts to pick up steam. But one way or another, I think the easy money is going to be made here in the stock market. Gold is at serious risk, especially if the yen keeps falling into an intermediate bottom and gold follows it. Gold is at serious risk of transitioning into that short cycle scenario.